welcome to another edition of Taking Stock. This is the show where we take stock of the week gone by and prepare you for the next trading week. I'm Sonia Shenoy, and with me as always is Anuj Singhal. Well, it's been a sort of quiet week for the market. Give and take everything, the market didn't move much. The Nifty gained just about 1% or so. But if you looked beyond or beneath the surface, there were plenty of stocks that made you money this week. Next week is expiry, so it will be interesting. Anuj, the market was very volatile this week, but within a range.
Yeah, I think, Sonia, you made an interesting point that the market, if you look at beneath the surface, made big moves. I think the market this week had a problem in terms of a couple of names. One was Infosys, which before Friday had a really weak time, and the other was Axis Bank and even ICICI Bank. So, X of that, it wasn't really a bad week for the market. Yes, it did slip in last hour of trade on Friday, but otherwise I would still say that, it was a week of short covering, and there could be some more short covering next week. Next week, of course, is expiry, and it's crucial because it's a 3-day week. After a long time, we're having a 3-day week expiry. So it's going to be interesting. My sense is that, there's one more round of short covering move left in the market, which could take it to 8,000, which would be the real test of this market. But all in all, it was an okay week. It was not a bad week. It wasn't a great week, but individual stocks did well. GAIL, for example, that stock really surged. So there were some really good stocks which made a lot of money for traders.
Oh yes, if you were an ace stock picker, you would have made a lot of money. But let's get in some views now. Joining us in the show today, we have two guests. Sanjay Dutt joins in, and we have Bala as well that joins into our discussion. Gentlemen, thanks for being with us. Sanjay, let me start off with you. Well, it was a purely short covering that we saw this week. I mean, give and take everything, the market has fallen from that 8,300 level to about these levels of 7,850 or so in the last 2 months. Is there more downside in store?
Sonia, I have a few observations before I really answer your questions quickly. One is this market doesn't have a memory on a day-to-day basis. From a day-to-day, it's day before yesterday was 100 point down, then we saw 100 odd points up. On Friday, we saw a negative open to a very strong positive intraday movement. It's a market which is just meandering, and when I look at it, it's a market which is broadly, a victim of this trinity, and that trinity being, commodities, currency, and flows, which obviously are all interlinked. But that's exactly what is bothering us, and that's kind of bothering the entire emerging market, game plan at this point of time. So it's because of this. So one can't say that there were short coverings, so therefore markets went up, but next day they go down again. So you don't know what to play it with. Suddenly you look for reasons for it to go down. So till this entire process of bottoming out, emerging markets kind of settling down, and I think we're towards the end of it. Till this settling down doesn't happen, we will see this flip-flop continuing, and every other day a new factor playing out.
Sanjay, hi. But having said that, would you stick your neck out and say that the recent low of 75.40 will not be breached and we will not go much lower from here?
Oh yes, no second thoughts about that, Anuj. I think markets have done their price and time correction both. If you look back and see, everything has been thrown at the market, right from the unfortunate terror attacks last week in Paris, to a currency weakness, to commodities collapsing to new lows. Everything has been thrown at the markets, and markets have fairly held out. So which means, and the reason why I'm saying so is because there are companies across commodities which are there in the index basket as well as the broader mid-cap indices. The companies which are impacted by the currency, there's IT, etc., which are also in the basket. So everything has been thrown at the market, and we've seen it's fairly resilient. That 75, 76, 700 kind of level is fairly resilient. And I think from now on, there's no reason to really worry as to we'll go back anywhere below that. I don't think so, no.
Okay, no from Sanjay. Let's see if Bala agrees with that view. Jay, hi, good to have you on the show. Technically, would you say that a bottom is in place, and would you be long on the market now, or would you be short on the market?
Yeah, we're definitely not willing to be short on the market. We are looking at the market. We are positioning ourselves long on the market. So see, we had repeated a couple of times in the last couple of weeks that the 7619 level is a very crucial level. The market has actually clocked a higher bottom at 7714, and now what we need to do, what we need to see the market do is that it needs to eliminate the alternate bearish possibility. That will happen when the market closes above the descending trend line that's currently placed somewhere about 81.90 to 82.25. So that's a bit of headroom there. But on a short-term basis, we want to see the market close above 7940. That's an important resistance for the market. If you see the market came down from that level on Friday, the reason for market coming down from there is 7940 is a very important resistance. If you see a close above that, is a early sign for that the market is trying to rocket up. So we want to see the market close above 7940 as an initial level. And once that happens, we can be a little more confident that the thesis that we are holding and projecting that the market's bottom is already in will come into fruition.
Okay, fine. So that's the trend for the market. But Sanjay, let's talk about individual stocks now, because in this month you've got some great opportunities in some of the good quality large cap names. So for example, Sun Pharma has fallen 20% in November already. Dr. Reddy's is down 25 odd percent. Infosys is down 8 to 10%. Do these look like good opportunities, or do you think that it's better to just be a bit cautious and wait this period out?
No, I have a contrarian view here, and I've had this for about a month or two. I think you and Anuj recollect, probably Lata was also on the show, or Anuj was there. I personally feel that this is part of the bigger pattern we are seeing. We are seeing some of the smarter money, trying to go out of the defensive plays, the IT, pharma, etc., and are positioning themselves to more aggressive plays for the next 6-12 months. Because, frankly, I don't see any reason why good growth and good numbers thereafter would not start kicking in now, because everything is kind of falling in place. Government is aggressively on a reform process, aggressively on a government spending process in terms of infra, roads, etc. We've had the pay commission recommendations coming in now. They'll obviously be implemented soon. So therefore, a good consumption kicker would come in there. So my sense is that smart money is starting to bet on more aggressive kind of portfolios now in the short term and even the medium term, and kind of going underweight on the traditional pharma and IT, etc. So I would be a little suspect in really questioning and saying that this 20-30% fall is a great buying opportunity. Frankly, I would be underweight pharma and IT at this point of time for a reasonably long period of time, and would take a more risky bet. That's the kind of profile I fit in, and bet on some of the more beaten down names, which would probably give me better returns over the next year or two. And my sense is that's exactly what is playing out right now.
Okay. Jay, what about you? Because, we've seen the IT and the pharma names come under quite a bit of pressure. Is there any trading idea that you would advise for the next couple of weeks on either of these names? And if yes, which stocks would you be looking at?
Yeah, the IT sector, the CNX IT index is coming off of a very important support at 10,800. We've seen a couple of days of bounce from that level. I think, my view was that, it's going to, the IT sector is going to oscillate between the, March highs and the September lows. But barring a couple of stocks within the space, I think HCL Tech and Infosys are positive here. I don't have a much positive view for the other stocks within the space. But, I wanted to see HCL Tech correct slightly below 800. But it started bouncing much before that. But if it were to have dropped below 800, I think it would have been a good bet. So you shouldn't mind a 5 to 7% aberration if you're a medium-term investor. So I think HCL Tech is positive within the space. I think I'm looking at record highs. But before it does that, we could see much more back and forth price action before the stock takes off. So be prepared for a back and forth price action. It will not be an immediate moving stock. We could see a little more chop and let it work that chop out, and we can look at positioning ourselves in those two stocks, Infosys and HCL Tech.
Okay, Sanjay, the bigger problem for this market has been that private banks, ex of maybe HDFC Bank and Kotak Bank, have not been able to perform, and at every higher level they attract selling. This week also we saw ICICI Bank, Axis Bank. In fact, Axis was one of the top losers for the week. What's going wrong here, and is it a good risk reward right now, or is it time to still stay cautious on some of these names?
No, I think there again I have a contrarian view, and I've had it for quite some time. I would prefer moving on to good quality PSU names and getting out of private sector banks, particularly the large private sector banks, which I think are priced to perfection to quite an extent, and the risk reward is not favorable in my point of view, because it's not that the problems that we have in the banking sector are unique to PSU banks, so therefore they should trade at 0.2, 0.1 or 0.5 to book price to book versus 2, 3, 5, which we see in good quality private banks as what has been there on a sustained basis. So my sense here is that I wouldn't be too positive on private banks that have come off 10-20% and I want to buy them. On the contrary, I would look at beaten down names in the PSU space, like a SBI or a Baroda or something, who are now aggressively starting to set right their balance sheets, and obviously government is also completely committed to the banking sector reform, recapitalizing them, setting right the entire process of how they're being managed and lending, etc. So I would be a little wary of the private banks. Yes, they would selectively they would make you money, but as a basket within the banking space, I would be worried because aggressive competition is also building up there, where we've had very clear voices from the RBI governor coming in that licenses, etc., and everything will go on tap very soon. So these banks with the lofty valuations would be the ones who would be most vulnerable to aggressive corrections.
Okay, gentlemen, just stay on. We need to take a short break, but we'll come back and continue chatting about the markets and individual stocks. But in the meantime, let's listen into some market opinion that we heard in the week gone by.
I think the problem for the market in terms of the index is that there's no real leadership at the moment, and that's where the problem lies. I mean, even your defensive sectors, are being punished, whether it's from pharma because of the rules coming out of the US. What they're doing is excellent. I mean, for the long-term picture, it's very good news. But that doesn't incrementally change anyone's earnings overnight. And that's what the market's looking for. It's looking for the quick kind of earnings, kind of move higher. And it's just not happening at the moment. So, I can't get overly negative. I know it's easy to be negative at the moment, but I just can't get negative about India.
I think the market can easily, have bad days, and we can see another 4 to 5% correction near term. So use those corrections to buy in and be very focused on management quality and have moderate expectations of earnings growth.